everyone. Welcome to 2024, and thanks for tuning in to the SoFlo Real Estate Show. We have another great series in store for you. As you know, this show is dedicated to you as buyers and sellers who want to get the most relevant and most impactful information for the housing market. So in today's show, we're going to get started. For all of you buyers who are sitting on the fence, and rightfully so in 2023, watching the interest rates go up, watching the feds do what they were doing, and not wanting to get into the market right then, you know what? It made sense. But if you're thinking about buying a home and you're thinking of staying on that fence, it could be one of the biggest economic challenges and mistakes that you will be making this year. My name is Athena Chilicas Barrocas. I'm the creator and the host of the SoFlo Real Estate Show. I'm also a 20-year veteran in real estate. I have been selling luxury homes for over 20 years, and I absolutely love working with my clients. In today's video and podcast, we have Julie Dinda, Radius Financial Group, on with us, and we are going to be talking about how to properly prepare for when the interest rate does drop to the point that you're comfortable in jumping into the market. So remember, like and subscribe to this show. Let's get to it. Julie, welcome. Glad to have you here, and welcome to 2024.
Yes, 2024. Happy New Year to you and everyone that's watching. Hi, everyone.
Thanks, Julie. Welcome back. Last year was a roller coaster.
Oh,
Oh my gosh, wasn't it?
it really was. Yes, I agree.
We had homeowners not wanting to move. We had interest rates going up. We had the feds doing things that were, normally very impactful, but took such a long time for the economy to respond to their interest rate hikes and their federal, what do you call it, monetary programs. What did you see in your lending side?
Yeah, we had rates go all the way up to 8%. They moved up, they moved down, towards the end of the year. Luckily, rates dropped a little bit. I just locked a loan at 6.5 on Thursday. And so they're back, they're dropping, but it has been a very, very crazy 2023. So I'm excited for 2024 and all the predictions of what's happening and what we should see out there.
I am too. All of the analysts are saying 2024 is the year. Sellers are going to be selling and buyers should be buying. So let's talk about some of those predictions. I was just reading here that the feds have anticipated 3 rate drops in this coming year and at the very beginning of the year. I'm thinking probably we'll see those in early spring, the final of the 3 rate.
Yeah, we're seeing indicators. April is going to be a great month to buy a house here in that area right there, springtime.
And April is just around the corner, so I'm super excited. And the other thing that's driving those interest rates is inflation. So I took a look at some of the stats. And in 2023, we had an inflation rate of 3.2%. The prediction for 2024 is 2.4%. 2025, we're getting to that sweet spot, 2.2%. So if these indicators are correct for inflation, we should have a very good interest rate to provide to our buyers for the next 2 years.
Yes, and I'm sure you can touch on it too. And in Florida, housing market is only going up. So the equity is going up, the interest rates are going down. It's a great time to get ready to buy a house for sure.
And getting ready to buy a house is exactly what we're going to be talking about. I did see another item from the chief economist for the National Association of Realtors, Lauren June. And he said, even though we had a persistent shortage of inventory in 2023, they're predicting, as an analyst group, that they're going to see a rise in home sales, properties going on the market, sellers willing to sell, of about 13.5%. So we're going to see that, tight inventory start to loosen up with the rates coming down. So, we're going to be able to hopefully be able to provide our buyers more options, more alternatives, more choices.
Oh yeah, absolutely. No, it's looking good.
It is looking good. So, you were talking about our home appreciation in South Florida, Julie. This is incredible. Here's some other stats that I pulled up. I love pulling up stats at the beginning of the year because it sets precedence of what we were and where we're going, right? So
Yes,
I
it's so
love it. I
true.
love it. So let's take a look at pre-COVID through October 2023. Okay. Pre-COVID, October 2023. Here are two important items that we have to look for when we're talking about South Florida market in particular. High payroll employment rose 9.3%. That means more money is coming into the state of Florida,
That's
specifically
great.
South Florida. 9.3%, Julie.
Jeez, that's a lot.
That's
That's great.
that is great.
Incredible.
Here's another one. Home appreciation pre-COVID through October 2023. You want to make a guess at this number? Or should I just surprise you with the answer?
High 50. Surprise me.
You're close. 65.3%.
65%. Wow.
That's incredible. That's incredible. So that means our
Incredible.
sellers have a lot of equity in their home. That means they
Yep.
can upsize, they can downsize, they can move to visit with their grandchildren. They can do almost anything they want to do with that type of built-in equity. So super exciting times.
Oh yeah, I'm hearing a lot of people just using that home equity, as like a line of credit is, borrowing off of that instead of going to the banks.
Yeah.
There's so much equity out there. It's great.
It is great. So it's super exciting. So I took a look and I'm like, what are going to be the top two challenges for our buyers? We're going to talk about helping them prepare to buy a home as the interest rates drop. But what are their top two challenges? Their top challenges, 61% of buyers this year their greatest challenge is their fear of finding the right home. We go back to inventory, right?
Oh
Their
yeah.
fear is finding the right home. The second, 17% getting the right mortgage. So, I think we are on target for our discussion today. I really do.
Yes, that's our favorite, our favorite line. Date the rate, marry the mortgage. You marry the
Marry the
mortgage and you date the
house,
rate.
take
Yeah,
the
you marry the
rate.
house, date the rate.
Oh my
Exactly.
gosh. Oh, but hopefully we don't have to worry too much about refis like we were talking about when the interest rate was knocking at 8%, right? We're going to get into
Exactly.
something that's going to be a lot more comfortable for many more buyers. Oh my
Yes,
goodness.
exactly.
Well, you ready to turn our attention to the actual topic here?
Yes, I'm excited. Yes, I'm excited to dive
Okay.
into it.
Let's talk
Yes.
about understanding and preparing for the rate drop, the mortgage rate drop. Julie, talk to us about this. Why did interest rates even start to come down?
So, typically when you think of the interest rates and why they fluctuate, it's pretty much because of those economic factors that we were just talking about. And this recent rate drop, here really is no exception. Central banks adjust their rates in response to those economic conditions. And then they aim to stimulate the economy and control the spending and the inflation. The recent drop could be a strategy to encourage borrowing and investment and boosting the economic activity in general.
No, that makes perfect sense. And we're going to see that this year. So let's talk about how does these rate drops affect buyers? Not so much in purchasing a home, but what does this do to their overall financial position? So
Well,
we've got
yeah, I mean to dive into you're speaking on like if they're buying a house, like how does this affect them?
right. It could also affect, for example, their savings account. The rates come down, they're not making maybe as much in their savings accounts, or how it's affecting their other
Oh yeah,
investments
it can
or their
affect your
mortgages.
investments. Yeah. Yeah, the drop in the fee itself affects so many things like your
Mhm.
investments. So it can, influence your investment markets in general. The investors may shift towards different assets in response to like changing the yields. It's a good time to review that investment portfolio and consider adjustments based on your, financial goals, maybe your risk tolerance. When it comes to your savings accounts, on the flip side, lower interest rates might mean lower returns on your savings account. While this isn't great news for savers, it's essential to be aware of the potential impact on your overall financial strategy in general. If, let's say you bought when it was at, 7% and the rates start to go down, obviously if you have a variable rate mortgage or considering buying a home, those lower interest rates can mean the reduced monthly payments. If you have a fixed rate mortgage, this change may not affect your existing loan, but it could create opportunities if you're looking to refinance, or if you possibly want to get into investments and, purchasing multiple properties for income and rental income.
Yeah, absolutely. It goes right back to strategy and, what you have been doing in the last 2, 3 years, pre-COVID to today, and what it's going to look like in the future, because everything is going to look very different in 2024.
Yes. Fingers
Right?
crossed.
Oh, my fingers are on. I'm so confident. I am just like, I'm almost giddy with excitement. I really
Yes,
am.
it's true. It's true. It's all the indicators are saying that. And I think that, over the past couple years, it's very deserved, very well deserved for all of us getting through it and, being able to take advantage at the end.
Absolutely. So let's get to it for a moment. We have a
Sure.
buyer. They're ready to go ahead and buy, and they're going to come to you, Julie, as a loan
Yes.
officer. What are you going to sit down and talk to them about this year versus last year? How are you going to help them prepare as this rate comes down?
Yeah, so yeah, it's great. Now that we've discussed the what and the why, let's explore how we can prepare for that drop in the interest rates. So, first step, evaluate your mortgage. If you have a mortgage, now's an excellent time for you to review those loan terms. Consider talking to your lender about refinancing options, especially if you have a variable rate mortgage. I'm seeing a lot of refinances right now with all of those credit cards just skyrocketing to 23. The other day, someone wanted to take some money, they were like 10,000, short. They wanted to take some money out. They were telling me that they wanted to buy this new furniture, and, and the guy that was selling it, was going to give them a discount. If it was cash, it was like 7,000 for this Italian furniture. And the bank was charging 29.9% for them to take an advance on that cash for a credit card. Now, he doesn't need this Italian furniture and he could probably just go, somewhere else and do it. But imagine that 30% if you're taking cash out of a credit card. And some people really needed to do that this past year or so. So we're seeing people refinancing so that they can get it at that, 6-7 percent, so that they're not paying these 30% credit cards every single month.
That's a great point. So really consolidating, what people had to do, whatever that happens to be, because it was a tough couple of years. It really was a
Yeah.
tough couple of years.
And
So to be able,
it used to be your student loans, like, oh, we got to get rid of our student loans. And now it's this credit card situation. It's crazy, and you just charge. So
right.
yeah, it's
But it
tough.
does make sense. Take that 30%, 25.99% refi, and put it into, even at 6.5, 6.75, 6%, so much better, so much
Yeah,
more
it's your
money.
equity. Use it.
Yeah,
Yeah, use it.
use
Don't
it.
let it just sit there. I always tell people, next step would be to reassess your saving strategy.
Mm.
So interest rates on accounts may be a little lower, but it's crucial to reassess your saving strategy. Explore alternative options such as investment accounts, which may offer those higher returns, obviously with the higher risk as well, a bit higher risk. Review your investments. So take a closer look at your investment portfolio. Consider diversifying or rebalancing based on that risk tolerance for long financial goals. A financial advisor can provide that valuable insight tailored to your specific situation. You can, do little things too, like, Dave Ramsey is like our, like, we follow him in everything we do. It's like, why have all of this money in investments and have 35.9% credit cards? You need to take some of that, invest, pay off where pay off that area. And, your house should be the only, debt that you should have on your name, explore loan opportunities. So the lower interest rates can make borrowing actually more affordable. So if you're considering taking out a loan for a major purchase, such as, let's say, a car, or, let's say you want to add that pool, or, you want to take that kitchen, or, you're done with the kitchen, you're done with turning off the electrical panel because the dishwasher won't work anymore, or whatever. Now might be an opportune time for you to use that money that's in your house and do the things that you've been planning to do.
Right. Do those upgrades, those necessary upgrades. Absolutely.
Yes.
Absolutely. So as a buyer comes in and they're concerned, Julie, I want to buy a house. The interest rate is X. I think it's going to drop, another 2 points. Should I be waiting? What do you say to that buyer?
So you're saying if someone comes right in and says they want to buy a house, but they think the rates are going to drop
significantly, 2 points,
Yeah. So
what do you say to that buyer?
My conversation's a little different because we do a free refinance within 3 years. So if the rate drops within 3 years, I will refinance you for free. So my conversation's a little different, but in a regular, just a conversation wise, it's like, okay, well then in 2 years when the rates drop, then you can do a rate and term refinance and save those thousands of dollars. And now at least you have 2 years of Florida equity that is just building and building by the day, building in equity. And that 2 years, you're going to collect enough money to, make up for all of that.
Right. That's an interesting point. And, we've been hearing it, I've been sharing it, is that when the interest rate comes to a point where buyers, the mass number of buyers want to come into the market, wherever that is. Is it a 5? Is it a 6.25? We don't really know. But when it happens, it's going to happen with great velocity. And when that
Yes.
does take place and all those buyers come in at the same time, probably summer, late spring, early summer, it's only going to do one thing, and that's going to drive the price of that home high because we still have limited inventory. Yes,
Yep.
we're going to have more inventory, but we have limited inventory. So we're going to see over appraisals. We're going to see waiving of inspections again, waiving of appraisals again. 20,
Yep.
30,000, 50,000, 75,000 extra money in the transaction.
Over asking price. We saw that all over the place, in Weston and Parkland and, Cooper City, all these places that have amazing schools, people will pay for those schools. So right now you're not having to pay that extra 50, 60,000 over asking price. But when rates drop, we saw it. It's in the books. We saw it. That's what happens. We had people paying for people's Netflix for a year, or house cleaning for a year. It was crazy town.
And so, I say to my buyer audience out there right now, this is so not the time to
wait.
You need to sit on the fence. It doesn't make sense because there's going to be more when the market comes down to a rate that all the buyers want to come in. And instead, some lenders like yourself, Julie, offer a free refi on the mortgage side.
Correct. Yeah, take advantage of those loan, offers that are out there. They're being put in place because we want to also do our part, to help the community. During COVID, we, when banks they were so inundated with, with giving loans, we started doing loans under our name and using our own money. Like we're always apt to do whatever it is that we can help adjust to where we are. So right now, that's where we are. Right now is we know the rates are going to drop. We know buyers are nervous. We know that they don't want to, get stuck, paying more now so that they buy now and then getting stuck later, so we do these, these things where we can adjust. But it's anything that you do. The other banks are doing the same, people are doing it. It's up to the buyer to have the know-how to take advantage of whatever it is that works for them.
Yeah, very good point. And that's why I love the show, is because we offer great information. And you're absolutely right, Julie. The best way to start is by having a consultation with a realtor that you trust, with a loan officer you trust, and really understanding how your portfolio is going to look this year as it compared to last year, and what you can do differently, better, to really be able to succeed in doing what you want to do, which is to buy a house.
And my
And
best advice
thrive.
that I can give to anyone watching is stay informed, stay proactive, and remember that adapting to change is a crucial part of financial success.
Ooh, I like that. And you are right. So, everybody out there, it is a scary time. Things have changed dramatically. If you want more information, contact myself, contact Julie. We're here to answer all your questions. So, Julie, thanks for being here. Thanks for kicking off 2024 with your insight and your wisdom and your knowledge. Wishing everybody a happy 2024. See you next week.